Everything you need to get set for the start of U.S. trading. This is Bloomberg The Open with Jonathan Farrow.
This is Bloomberg's The Open. I'm Manus Cranny in for Jonathan Farrow. You've been listening to the president of the ECB, Christine Lagarde, and how it personifies the differential between the US and Europe. Two roads diverged in a yellow wood. Let's see which road Lagarde takes. Quick look at the markets. Equities are flying higher. Growth in the United States of America, the strongest since 2021. More from Mike McKee in a moment, and prices are dropping. Equities are higher. The breadth in equities comes this morning in the stronger economic read, up 1.3% on the Russell 2000. Roll it over and you have a look at the impact of Lagarde's speech. She talks about rates feeding forcefully through, but she stands by her comment in Davos with Francine Lacroix last week about the summertime timing, the timing of the first cut. She reaffirms what she said to Bloomberg News last week. Yields drop, the euro drops. By the way, this market seems to be focused on rates feeding through forcefully and a disinflation narrative. Inflation on all the underlying measures are falling. Yields around Europe decline, most so in Italy. Lagarde leaves optionality on the table, but it is premature to talk about rate cuts, is what she said. Have a look at the euro dollar. The euro dollar declines because this market is betting. We went from 129 basis point cuts going into this meeting to 138 and bid now. So the euro is a little bit better offered, I think, because of the economic outlook and the disinflation outlook, rather than the timing that she really is trying to avoid. There are no radical pickup in the PMIs, just incremental. Christine Lagarde weighing in on the decision.
Aside from an energy-related upward base effect on headline inflation, the declining trend in underlying inflation has continued, and our past interest rate increases keep being transmitted forcefully into financing conditions. Tight financing conditions are dampening demand, and this is helping to push down inflation.
Joining me now to discuss the press conference is Invesco's Alessio De Longis and Ella Hoxa of Newton Investment Management. There's a resounding line in this news conference. Rates feed forcefully through. Is the ECB at risk of bullying a recession? Ella, good morning.
Good morning or afternoon here in London. Well, I think the data generally has been weak in Europe, from certainly surprising on the downside, reaching a trough in the summer of last year. And so we've seen a bit of upside momentum, as Lagarde was referring at the start of this year. But as she says, it's a tick up. So it's very difficult to get too excited about that. It's a bit of an inventory restocking going on. And so some hopes that things might look up a little bit. But look, I mean, further down the line, she is talking about a month-on-month view on data, and certainly the indicators we look at don't paint such a bullish picture for growth in Europe, certainly not 6 months down the line. And so potentially, yes, keeping rates tighter, you are potentially, I think, judging by the reaction of the euro, you're potentially triggering some more concerns on growth.
Okay, Ella, hold those thoughts. Let's cross over to Alessio. Listening to Lagarde, the bond market is very much still holding on to the slowdown in disinflation, the stagnation in the fourth quarter as something that gives them some optionality for earlier rate cuts. Alessio, your first take.
Yeah, I think certainly the ECB is making the right decision with respect to that timing question that you outlined at the opening statement. The PMI is just being marginally better. The bank lending service still being in a tightening environment, but somewhat less so. And most importantly, the differential impact that the chaos in the Red Sea is causing to container routes for Europe rather than the US, really, does not argue for accelerating that rate cut path. But rate cuts are still very much on the table, and the market is basically interpreting any rate cut that is not happening sooner will be happening later. The ECB might be then in a position of having to do more later rather than something sooner. But otherwise, we think over the next 6 months, there is still an interesting cyclical divergence emerging, evidence from the PMIs that Europe may actually not see a deteriorating environment over the next 6 months, regardless of what the Q4 GDP report will look like.
Okay, and as she said, there's just the smallest incremental tick higher in those PMIs that creates a foundation for something better, but nothing tremendous. Let's talk about the United States now. We just had fresh data this morning. Bloomberg's Mike McKee joins me now. So the GDP, the force is with us. We are strong.
Well, you went from Robert Frost
I
to
did.
Star Wars. I was thinking in terms of Robert Frost and two roads diverging in a wood. The U.S. is taking the road less traveled by, the one of growth that is stronger than expected, unlike in Europe. GDP comes in at 3.3%, much stronger than anticipated, down a little bit from the third quarter, but nobody's going to argue with 3.3%. And on a fourth quarter over fourth quarter number, it was up 3.1%. The Fed thought they were going to get 2.6. So the Fed's going to have to think about these numbers. Annual GDP up 2.5%. That's going to be good news for Joe Biden and his political ads. Consumer spending in that GDP report was still strong at 2.8%. Business spending increased a little bit. And look at that GDP headline price index, 1.5%. The Fed has said that stronger growth might be an inflation risk, but doesn't look like it so far. Other numbers we got today, initial jobless claims, they're up, but they're still in the low 200,000s, and continuing claims a little higher than anticipated, but still fairly low. Trade balance, trade contributed to GDP growing. Trade balance narrowed a little bit. Durable goods orders flat, but that was largely because Boeing orders that the company received not reflected in the December numbers. Capital goods orders, though, up 0.3% after 1%, so businesses were still spending. So good news overall. And one other thing we have to slip in here, Manus, because it's important to the banks, is the Fed ends the arbitrage opportunity with the bank fund lending program. They now move the rate from SOFR plus 1 month futures to equal what they're paying on reserves. You can notice there, the blue line. That's the arbitrage. Banks borrowing from the Fed at a cheap rate and depositing it back at the Fed to get a larger rate. That ends now, and the program itself ends March 11th. So one bit of income for banks goes away.
Yeah, free money from the Fed, and as JP Morgan said, shutting the barn door. Mike, thank you very much. Great synopsis of the data. My guests this morning, Alessio De Longis and Ala Hoxha. Alessio, I mean, you say, I sat back and thought this morning, this is about a very rarefied era that we're living in at the moment, of where tech is just accelerating. And you would say that unless global growth begins to accelerate meaningfully in the near term, it's going to be hard to validate adding more risk. Well, here you go. I mean, you've got everything you wanted. You've got the GDP on fire here in the US and prices dropping. Can that sustain? And are you convinced to add more risk?
That's a very, very important point, Manus. We have been overweight risk now for 6 months, and the GDP, we have argued for a while of this perfect Goldilocks scenario that was likely to occur. And I think we saw that in spades with the performance of assets, and now with the report today for the economy, also for Q4. I think this report largely validates what asset prices really did. Let's remember, Q4 was a fantastic year for risk assets with very broad-based participation. Now, we are at a junction now where the markets have priced interest rate cuts and seen a boost from this expectation of this Goldilocks scenario where growth is below trend and stable. Arguably in the US, it's been quite a bit higher than global growth. And inflation is coming down. That's the perfect scenario. But now we need to see a continuation of that very strong data very quickly. Otherwise, there is a risk that market participants may take a bit of a pause. We need to see a stronger earnings season. We need to see that, similar to what the ECB said, from a tentative reacceleration to a meaningful reacceleration in growth.
I'm trying to keep everybody in the church happy. Ella, in 20 seconds, on the backing up of yields, are you a buyer of them? Sorry to squeeze you, but time is against us.
Depends on your starting point. So if you're starting low duration, which we are, then you start buying backups here. I think the risks down the road still remain, but it's a Q2, Q3 scenario rather than playing it for just now.
Okay, Ella, thank you very much. That's a short, sharp riposte. Thank you for being concise. Alessio De Longis, Ella Hoxha on the markets. Joining me now to go under the hood ahead of this opening bell. It's two roads diverging in yellow wood between Tesla and IBM. Abby, what have you got for me?
Indeed. Well, Tesla is weighing on markets, but nonetheless, we have the S&P 500 heading to a sixth up day in a row. Taking a look at the shares of Tesla, they are down, but off of the lows, down about 9% right now. And actually, that looks like they're back at the lows, the worst day of the year. They've missed numbers, and they also importantly said the rate of expansion will be notably lower, pointing to some saturation for the dominant EV maker. On the other hand, CEO Elon Musk is indicating this will be temporary. They're going to build cheaper cars in their plants in Austin and Mexico, and this will create new demand. Boeing, or excuse me, Humana is down 11.39%. The shares are really taking a hit right now, and this, of course, after they cut their 2020 forecast, not surprisingly, given some of the action of last year and the fundamentals. They've pulled the 2025 view in. Other insurers tumbling. One bright spot, very small bright spot at this point, Manus. Microsoft up 0.3% nonetheless, earlier at an all-time high. They did announce earlier that they are cutting 1,900 Activision, Blizzard, and Xbox staff, but just a small gain on that right now at this point.
Yeah, some pretty interesting job cuts coming through on the tech side. Abigail, thank you very much. A synopsis worth having. Coming up, Elon Musk failing to convince the investors, overlook Tesla's slower sales growth. We have more on the results with Craig Irwin of Roth Capital with me to talk Tesla.
This was an important call where Musk and the rest of the team needed to step up, adults in the room, give some guidance in terms of what's happening on pricing, the margin pressure strategically. And I'd say train wreck would probably be soft, because this was one where the long-term story is intact, but in the near term, they needed to navigate, communicate. They didn't do that. You'll see a lot of pressure on the stock.
That was Dan Ives of Wedbush weighing in on the Tesla earnings, and the company yesterday posting their first annual profit decline since 2017, warning of notably lower volume through 2024. Joining me now is Craig Irwin, Roth Capital Partners Managing Director and Senior Research Analyst. You're neutral on the stock. Your PT is 85. It's got to take a hell of a bath to get there. Was it a train wreck? Good morning.
So, I can't say that this was not unexpected, right? You know, consensus for growth this year, people were looking for 2.2 million units. They did 2 million annualized in the fourth quarter. Growth was 3.5% on an absolute basis for revenue year over year in the fourth quarter. So come on, we knew that things were getting worse. We knew that things were getting much worse. So the $85 price target is based on a comp versus Toyota, right? Something that's fair and reasonable, because there's nothing that Tesla has that Toyota doesn't. Now, there's two levers that Elon Musk, I've been waiting 5 years for him to pull. One is the mini car. The other one is India. So he's now getting about as official as possible on the mini car, and saying that saves his growth record to get him to 50%. You know, India, the Times of India has actually announced a 500,000 unit facility. So heck, we should consider that priced in too.
So then my question is to you, is this market slashing down by 9%, 10%? Does that say to me the days of 40, 30, 40, 50% growth, they are over? They are in the rear view mirror?
Absolutely over, yes. This company is in a maturation phase. This industry actually is in a maturation phase. Elon Musk is driving it. He's creating the industry by driving price cuts, by putting out less expensive vehicles. He's forcing the dominant players like, you know, Mercedes to get out there and compete.
You sound like somebody that wants Elon Musk to go. You don't want him to have 25% of the company.
No, I love Musk.
You love Musk. Do you want him to have 25% of the company?
I actually think it would be fantastic because I think it's overvalued. Let them have it.
Will the board go with that?
It depends on what the board thinks on valuation. It's probably hard to sell to the retail shareholders, to have a CEO threatening to put AI elsewhere when he's telling everybody this is an AI and robotics company. No, it's a car company. It doesn't ring well. I think it was a misstep on his part. But heck, if that's what it takes to keep him engaged and passionate, get in there. I mean, this man has transformed the automotive industry.
Tell me what saves me from going to $85 then. Take me to the higher land. I've had people, giving me different prices on the higher land. So if you're 85 in the worst case scenario, what takes me to the upside?
I'll give you why it's going to $85 instead, right? So that's my price target. That's why, because the dancing robot was actually a human actor inside a suit. You didn't see Boston Dynamics get sold for $1 trillion, right? So robotics, give me a break. State of the art for 2014. Cybertruck, it's too Mad Max to be mass market, right? This is not a compelling vehicle. This is a vanity project for Elon Musk, right? The semi trailer, the Tesla Semi, customers that want this can't cite it. You can't put the charging in place because you got to get a multi-megawatt charging site off your utility. Utilities don't have that, right? And actually this week I met with someone that interviewed several of the drivers of those vehicles. They're not performing to specifications, right? You've got an aging fleet of vehicles out there. You've got, robo-taxis still far off in the future. All these things that have been used to, create hopes and dreams around Tesla are not coming to fruition. The tangible things that matter, mini car, India, China, US and Europe, right? Those are priced in. And that means that we're going into a very bearish phase for Tesla, where retail, I don't think, is enamored as much as they have been. And retail is a large part about what's propped this stock up.
Craig, you're shattering dreams. You're literally shattering dreams out there. You are. No, you're crushing it. You're crushing the Cybertruck like he crushed the window. Let's close it off very, very briefly. Have we got... Kathy Wood was with me a couple of weeks ago. She said, there's a moat. There's a fantastic moat around Elon Musk. You would say, to close off then, that moat is lit. There's a lineup of hole after hole after hole in the Tesla Elon moat. In a minute.
In 10 seconds, right? Take a look at the specifications on the Lucid drivetrain. Vastly superior to anything that's come out of Tesla. Vastly superior. Tesla stuff was designed 5 years ago and they haven't updated it. So, the basic specifications, kilowatts per mile and the weight of the vehicle. Tesla's lagging. It's not leading at the moment. And they really need to get out there and lead. The mini car could establish leadership again, but it's very high risk. The new manufacturing approach is going to be tricky and it's probably going to be late. And, I'd rather see, it actually go into production if I was an investor that was long this.
Okay, and then briefly in 30 seconds, China, you say it's all in the price. I'm seeing a deceleration, 25% growth from 36% growth from 96% growth. Have we got a demand problem or a product problem in 30 seconds?
So it's a political problem more than anything. So China is favoring Chinese producers, Chinese manufacturers. BYD is now the largest EV producer in the world. Tesla is being kept out of government facilities, but not just, government facilities, also banquet facilities, everything across China. There are more and more restrictions about where you can drive your Tesla for information security. There's real issues for Tesla in China right now.
Okay, I'm not coming to you for a whole new dream and a whole new way for the rest of the year. I'm just leaving it there. No, you've shattered my dreams. You've shattered my dreams. You're toast now. You're gone.
I respect Musk. He created the market.
Okay, well, you know what? He can win again. Craig, thank you very much. Craig Irwin of Roth Capital, keeping the dreams on ice for the moment in Tesla. Let's get into the sectors. Abigail Doolittle's with me. Make my dreams come true, Abby.
Well, some of the stock bulls, those dreams are coming true because we're looking at a 6th up day in a row for the S&P 500, the longest and best winning streak of the year, and there's broad sector support. 9 of the 11 sectors are higher. Real estate, utilities among them. Those dividends look more attractive when yields are lower. Speaking of Tesla, consumer discretionary is the worst sector on the day, down 1%, dragged down by Tesla. In fact, coming into today, consumer discretionary was one of the few sectors down. We now are looking at a 4-day losing streak for consumer discretionary, but you can see that it was really today that's the big decline, taking this index, this particular sector down nearly 2% over the last 4 days. In contrast, the S&P 500 and the Nasdaq 100 at record highs.
Yeah, those GDP numbers and the price index coming down certainly imbued a sense for the bulls. Abby, thank you very much. Trading Diary, this is what we got for you. President Biden will speak on infrastructure and jobs at 2 p.m. Eastern Time. Earnings continue to roll in. Intel reports after the close tonight. American Express deliver their results on Friday. And we'll get, you got it, the PCE. What's it going to do to the bond market? And finally, on Wednesday of next week, a Fed decision and Chair Powell news conference overnight. You're going to get a little hint of luxury from Louis Vuitton. What will that do? How well are the rich doing? And how tough is it for aspirational luxury? I'm aspirational luxury every day. That is Countdown to the Open. This is Bloomberg.